Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
New York coffee. The market is now pressing down below the unaltered bright green October 23 today uptrend, currently at 318.95, and towards the 50% Fibonacci line of the May 2024 to February 25 move at 310.80, making lows not seen since last summer. In the big picture, I put this down to the dark blue September to October 2025 bearish shift pitch hawk in showing the way lower, with the dark blue middle tine above, currently at 349.85, capping prices in early January and again last week. The one last week leading to a weekly key reversal down. We are now approaching the lower tine, the dark blue lower tine, which is currently at 306.20, though we do have some significant support to overcome before we get there. Specifically, a congestion band between about 312.50, 312.5, down to the 309.90 level, containing the 50% Fibonacci line of the May 24 to February 25 move, and the May 2011 high, respectively. However, there is also a late December last year to January this year pattern, a very lopsided pattern that we need to consider. It is a head and shoulders top with a bright red neckline, currently at 322.90. As I said earlier, it is lopsided and is really in the wrong place, but I would like to give it some potentials of a primary potential below in the 305.60 zone, just about where the dark blue lower trend line is, lower tine is, and a secondary, harder to reach potential down in the 288.65 zone, in amongst the congestion seen in July last year. There's something else I'd once again like to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 43 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025. It is a multi-year, 2012 to 2024, very large reverse head and shoulders bottom for bright red neckline on my chart, which is currently at 277.70. The break higher over this neckline reached its primary target on the upside, but there was a secondary harder to reach, much harder to reach target up in the 433.35 area. What was interesting about this secondary target was that nearby to that higher level was the next 100% projected Fibonacci line here at 433.75. Quite close in the scheme of things. Prices did indeed turn lower up at this key combination of the 100% projected Fibonacci line and the target of 433.35, dropping down through and closing below the important 50% projected Fibonacci line at 347.20 and below the high of May 2011 at 308.90. However, in July and again in August last year, the market started to form a base on top of the bright red neckline, a horn bottom, if you will. August 2025, with its monthly key reversal up, raced all the way upwards, and we saw an extension to that move up in early September 2025, but not reaching quite as high as we saw back in February last year, before dropping lower and setting up September 2025 as a monthly bearish harami. Since then, prices have trickled lower, such that we are now approaching the lower tine, which is currently at 312.5, of the steep October 23 to August 25 bullish shift pitch hawk. Now, I said 10 weeks ago that I don't favour this pattern much, but it is nevertheless still there as a pattern, and we will see if it is worth anything. I think actually we'll see this month if it's worth anything. Below this, and the high of 2011 is at 309 even. Well, we have the key, the real key of the bright red neckline below that. I should point out one more final feature on this longer term chart, the possibility that we may even now form either a very large bullish halfway hesitation or a possible bearish double top, with all the contrary implications both these patterns may have. I will not discuss this last point any further at this time, as it is way too early to isolate which it will be which. But in all this, I ask you, please remember, these here on this monthly chart are longer term, in some cases very long term patterns, and I cover them more fully in my longer term coffee technical analysis video published in January this year. London coffee. 37 weeks ago I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high," so that's last year's high, at 58.49 sitting above. This overhang of bearish pressure and ammunition is important. That's the end of the quote. This overhang of bearish pressure and ammunition is important as it started back then to press down, heightening the breaks lower. The reactionary rise seen since early August pushed up through some significant resistances, and these turned into supports, and some very keen ones, notably the trio below of interesting 50% Fibonacci lines. For the November 21 to February 25 move at 38.08, which is still support for now, the May 2021 to February 25 move at 36.49, which held up the market in late December last year, and the March 20 to February 25 move at 34.81, which so far has not been tested since early August last year. Since mid-December last year, we've had a small bull channel, currently 40.29 to 43.02, until this week, as last week prices tested up to it, up to some pretty heavy-duty resistances, and these were in the form of congestion at the 61.8% Fibonacci lines at 41.68, 41.87 and 42.90. Then there were the green short medium moving average, currently at 40.90, and especially the gold long moving average, currently 42.61, and the mauve medium moving average, currently 42.61 as well. I want to double check that. The long moving average is 42.29. My apologies, I got that 42.29 for the long moving average. These three are the precursors to the main overhead resistance, the dark blue February 25 to date downtrend, currently at 42.84. This downtrend has enough of an impact with me that I drew a parallel bright red bear channel around the September to December 2025 lows for bright red lower bear channel line, currently at 34.89, and a slightly higher bright red upper bear channel line, currently at 43.20. The break below the recent small bull channel is too early for targets, as it's not been confirmed, but it can lay out some potentials below of a primary potential down in the 38.90 zone, so not too far below, and a secondary harder to reach potential down in the 37.56 zone, reasonably close to December last year's lows.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.